But it's 11:40 on the dot, which means it's time for us to get into today's WesBank how-to show. Very, very excited. So, affordability, stability, equity, and your credit profile. How do these work for or against you when you apply for a car loan? Rudolf Mahoney from WesBank will be telling you more in a bit. If you're struggling to get your car loan approved, then this discussion is definitely for you. Remember that your car finance questions power the show. So go to WesBank Asset Finance Facebook page and at WesBank on Twitter or tweet using the WesBank How To hashtag to get your questions in. Now, Rudolf, lovely to have you back. Let's get straight into it. My first question to you. We wanted, we needed, but do we have enough for it? You know, tell us why is affordability more important now than ever before?
Hi B, it's so nice to be back. So the National Credit Act came into effect in 2007 and just very recently there was a major amendment to the National Credit Act. And it's a lot more prescriptive in how the banks are allowed to assess the applicants when it comes to looking at applications for finance. So affordability has become a big focal point, and it's all about preventing people to overcommit themselves in terms of debt, and also to prevent unscrupulous lenders to give credit to people who can't afford it.
Oh, all right. Okay, so Mbali Sugarly Bembe on Facebook has a question for you, Rudolf. She says, "Hi, Rudolf. I'm trying to apply for car finance, but my application keeps on getting declined due to affordability."
Yeah, I'm sorry to hear that, Mbali. Affordability assessment is there to actually help you, and I'm going to take you through a step-by-step how affordability assessments are done. So you get to the dealership and you fill in an application form. Okay. Now on every credit application, the applicant must now disclose all of their income and their expenditure. So your gross income, which is all of your income before you are taxed, and your gross expenses, which is all of your expenses that you incur over during the course of the month. That includes things like your food, your medical aid, your bond, your policies, rent, entertainment. So you need to disclose all of that. Then you also need to give the bank your 3 months bank statements as well as your salary statements. And then the bank will evaluate all of these documents in order to see what your disposable income is. So we'll deduct all of the income or all of the expenses from your income, and then we will look at your disposable income. And then we go to the application. We look at the car and the amount that you want to borrow and how you want to structure your finance deal, and then we calculate the installment on this loan. But then, so if the installment then matches the disposable income that you have available, you have a good chance of this loan to be approved. But we also need to include other factors like, for example, petrol, because, you know, petrol is quite expensive, insurance, and then maintenance. So if all of these factors fit into the budget that you have left, then most likely you will qualify for finance.
All right. And, you know, I'm guessing then Bali has to be very, very honest about her affordability, because then if she, you know, doesn't give off the right amounts, then she might have to struggle at the end. But Rudolf, I have a question for you. Why is, credit history, credit profile, and credit score so important?
Yeah, so let's use Mbali's example again. If she wasn't honest on her application, and if she didn't disclose that she has a overdraft or a credit card that she's paying off, or clothing accounts and so on, all of the credit providers, we actually report the standing of all of our accounts to the credit bureaus. So even if she doesn't disclose that information, we still go to the credit bureaus to see what your credit profile is like. So we'll see how many accounts do you have, how much money is outstanding on all of your debt, what is your total monthly repayments on all of these debts, are you making your payments regularly, and so on. So we can actually extract all of that information to see what your credit profile is like. So it's important to manage your accounts very well, because if you apply for any sort of debt, then the service provider has to look at your credit profile in order to see whether you are responsible in the way that you manage your debt, in order to assess you and to give you further credit.
All right. And I also hear that stability also plays a role in, getting your car loan approval. But what does a bank look for in terms of stability? It seems they're looking for quite a lot.
Yeah, so we've covered affordability. Now, stability is showing that you are stable in your life situation. So we will look at like, do you own property? Are you married? How long have you been employed in your job? Do you hop around between jobs? And these kind of things. So all of them are indications that this person is responsible in managing his financial affairs, and it shows that that there's a chance that this person will handle this loan that we want to give him better than someone who can't prove that he's stable in his life.
All right. So, Rudolf, somebody like me, 28, has a few properties, not married, no children, parties every weekend, buys expensive clothes and shoes. How are they going to check that? Am I a stable person to kind of give a car loan to?
So everything has to be in balance. So your affordability needs to show that you can afford this loan. Stability is not the be all and the end all. It just supports the argument that this person is a good application. So in your case, maybe your affordability will be well in line. The fact that you own property shows that you manage your finances well and you are versed and you understand how finance works. And also that shows that you've got a proven history of credit. So all of these things must be in line in order for the loan to be approved.
Oh, lovely. That's good. All right. Nadia Malaji posted her stability status on the WesBank Facebook page and wants to know if she's in a good position to get her car loan approved. So she says that she's 22 years old, has no credit history, started her first job a month ago and is looking at buying her first car. Good question. Thank you, Nadia.
Thanks for posting that question, Nadia. It's a difficult situation because she can't yet give us 3 months bank statements to show that she earns this money, and she hasn't got 3 months of pay slips. Also, the factors are a little bit against her. I would recommend that she takes on maybe a small loan or a clothing account that at least the credit providers can see that she is paying off a smaller loan. Don't overextend yourself, but you've got this history that you're paying off a loan, and then wait a couple of months to actually save for a deposit as well. And then apply for car finance. Don't just buy a car when you get your first pay slip. First sort out all of your finances and make sure that you're comfortable about buying or taking on debt.
All right, that everything is balanced. But I need to ask you, Rudolf, when it comes to age, are banks more reluctant in financing maybe younger people, 22, 23, 24-year-olds compared to, 30, 29, 31-year-olds?
Well, the banks are not reluctant. It's just that when, in general, when you are younger, you're not earning that much. You don't own property.
Okay.
And so only when you start reaching the age of about 30 to 35 does your finances start improving. Do you own a property, for example? And are these affordability becomes better, the stability becomes better. You're probably married then. So then it becomes easier to get a loan. And also, I must reiterate that the National Credit Act is very strict on the banks, that we must be very responsible in the way we lend credit. So we can't give finance to someone where we don't think there's a chance that he will repay the loan.
They'll pay it back.
Yeah.
All right. Okay. But, Rudolf, you've been mentioning one word, equity. What does equity mean, and how does this impact on, a car application?
Yeah, okay, so we've covered affordability, we've covered stability. And equity is the last one. So when you buy a car, it's all about the value of the car. So if the car has a market value of 100,000 Rand and the dealership is selling the car to you at 150,000 Rand, it's not a good transaction, because you are on the back foot from the onset, because the car is being sold for much more than what it's worth. So we need to look at that, and also we need to say to the dealership, guys, you can't do this. We can't approve this finance application because the customer is in a worse of situation. So, for example, if that car had to be repossessed in a month or two, then we will not be able to sell the car for 150,000. We can only sell it for maybe 80 or 90,000 rand, which means the customer is liable for that big difference. So it's in the customer's best interest for us to say, no, we can only allow so much over the retail value of this loan or for the vehicle, because, as I said, if the car gets repossessed at some point, we need to try and sell it for as close as possible to the cash price of the car to help the customer get out of debt so that he can fix his credit record again and then qualify for credit in the future.